Gold prices have had a great August and an even better week so far this week. And here to talk about whether or not you should be jumping out of it already is Mike McGlone of ETF Securities US. Mike, it's good to have you in the studio.
Good. Thanks to be back.
So Mike, is it time to sell out? I mean, we've already seen quite a bit of a jump in gold this week.
No, well, I don't think so. We don't look at gold as a trading vehicle. I think you should look at gold as an investing vehicle. And one thing it's really done lately, it's reasserted itself as a good investment vehicle. Gold got a little bit too cheap around 1,200. It's around 1,400 now. We think this whole correction is just a substantial correction within a really significant bull market. But there's times you should overweight and times you should underweight. I think we're still in an overweight stage. I think the stars kind of align around 1,500 in gold and S&Ps. That's basically where the 200-day moving average is. That was where support was on the way down. So as we get to near 1,500, I think people who have short-term profits can take some, but bigger picture, we think this is just a correction within the bull market.
So do you think there finally has been support put in at that $1,400 level for gold? Bottom level support?
Yeah, I mean, you never know what can happen. I mean, 1,200 I think was pretty significant. 1,400 is definitely good support. But I think the big picture is the market got to see what demand was out there when the tide was moved away, which was substantial. I was certainly shocked. I mean, just record amount of demand globally. And barely can you see that. You peel away a layer and see the demand below the market. And I think now that investors have seen that, they have the confidence to move forward and say, this is just not a simple correction. This is not a change. This is a correction within a broader bull market. And as we see prices move, sure, if prices move higher, there might be a little bit demand destruction. But the amount of demand that was brought out with lower prices, I think, was very legit.
We see a lot of people moving out of equities into gold, especially as the Syria conflict or the possibility of military conflict there does arise. How long can we expect for something like that kind of move to continue?
Well, I don't know what's going to happen in Syria, but before that conflict happened, I mean, just recently S&Ps were up about 20% in the year and gold's down about 20% a year. So we're seeing a little bit of reversion there. We're seeing a reallocation of assets, rightly so. There's been some profit taken equities. And just, I think what people are reflecting and noting is gold as a percentage of portfolios globally is really very low, 1%. And I think most investors know they have to increase that, maybe upwards to near 5%. And that, I think, is what's happening.
All right, Mike McGlone, thanks so much.
Thank you.
For The Street, I'm Joe Deaux.